Hello everyone, welcome to Akira's Academy of Accounting and Finance. And the next topic that we are going to discuss today is about the rules of debit and credit. Now we all know that whenever a transaction or event has happened, we have to record those transaction and events. And in the books, we have to debit one account, we have to credit one account. But you will be like, how to debit it? Which account we need to debit it? Which account we need to credit it? Don't worry. There are certain rules. If you follow those rules, it is going to be very easy for you to record the transaction. Okay. So there are two approaches. One is a traditional approach. They are one of the best for me. Okay. But it's on you. If you like traditional approach, you can follow the rules of traditional approach, and there is another one that is a modern approach. If you're comfortable with the modern approach, you can follow the rules of modern approach. So first we will start with the traditional approach. Traditional approach, they are considered as the golden rules. Okay. Now whatever transactions, whatever events are happening, they will either affect the personal account, real account, or nominal account. Now, when I say personal account, it relates to what? It relates to a person, a particular person. Now, that person could be my debtors, could be my creditors, could be my investors. Okay, so they relate to a particular person. Okay, now if that person, what we have to do, if that person is receiving, we will debit the receiver, whosoever. Okay, debit the receiver, we will debit that person account. If he's giver, we will credit it. Okay, so the rule of personal account is what? Debit the receiver, credit the giver. Whosoever is giving us, we will credit that person account. Whosoever is receiving something, we will debit that person's account. Second account is real account. Now what comes into real account? The assets, all the assets, we can say cash, we can say inventories, our stock. Okay, they all come under real account. And what are the rules of real account? Debit what comes in and credit what goes out. Cash comes into the business, we will debit it. Building comes into our business, we will debit it. We are purchasing a stock, stock comes into the business, we will debit it. If we are selling the stock, we will credit it. Giving money to somebody, cash is going out, we will credit it. If we are selling any property, the exit is going from the business, we will credit it. Okay, and the last is a nominal account. Nominal account relates to the expenses, losses, incomes, and gains. What left now? Either we are incurring any expense, either we are having some benefit, we are gaining something, there is an income, or there is losses. Okay, so what we will do, we will debit all the expenses and losses, and we will credit all the incomes and gains. Now let me explain you with an example. Okay, now let's say I purchase goods from somebody on credit. Okay, I purchased goods from Mr. Sham on credit. Now what I purchased? Goods. What are goods? They are the real assets. Okay, so what happened? The goods come into the business. What I will do? I will debit goods account, debit. Now who is giving me? Who is giving me? Mr. Shah. To what account does he belong? Personal account. And what are the rules of personal account? Debit the receiver, credit the giver. He is the giver of those goods. So I am purchasing it on credit. So to Mr. Sham account. So purchase account debit. Here I am writing goods for your convenience, but in purchasing goods, purchase account debit to Mr. Sham account. Now let's say I purchase those goods on cash. I'm giving cash to Mr. Sham. Okay, now what happens? The cash is going out from the business. So cash belongs to what? Real account. Credit what goes out. Purchased goods, purchase account debit to cash account. We are giving cash for the same. So to cash account. Now let's say I have a land. I am paying rent to the, it is on rented. Okay. I'm paying rent for that particular land. Now, what I'm paying to my landlord? Rent. Now, rent is what? It is an expense for me. Okay. So, rent comes under which account? Nominal account. So, what we will do? Debit all expenses and losses. So, we will debit rent account. We are giving what? We are giving cash to our landlord. So, what cash comes under which account? Real account. Credit what goes out. Cash goes out from the business. So we debited rent account. Rent. Why? Because it is an expense. We credited cash account. Cash account belongs to the real account, and the rule of real account is credit what goes out. Similarly, let's say I got a commission. Okay, for selling certain goods, I got a commission in the form, I got a certain amount of money in the form of a commission. Okay, now what happens? The cash comes into my business, cash account debit. Now commission is what? It is my income. Okay, so income belongs to which account? Nominal account. Okay, what I will do? I will credit to commission account. This account will be credited. Okay, so this is the rules of traditional approach. All the transactions, whatever transactions are happening, they will either belongs to the personal account or real account or nominal account. Personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out, and nominal account, debit all expenses and losses, credit all income and gain. Easy. Now we will move towards the modern approach. Okay, now what does the modern approach says? That whatever transactions relates to the business, either it will be an asset, liability, capital, expenses, or it will be an income. Nothing outside of it. Okay, nothing outside of it. Any transaction, it will relate to only these five things. Okay, now what does the modern approach says about the asset? That when your asset increases, debit it, and when your asset decreases, credit it. Okay, let's say I purchased a building. Now, building is what? Building is my asset. Okay, I purchased building. So, building account will be debited. I purchased that building by giving a check. Okay, my bank balance is reducing. Now, that bank amount will be what? It belongs to what? Asset. That cash and bank is an asset. Now that what happens to that? It reduces. So I will credit cash account. Okay. So here the building account, one asset is increasing, I will debit it. Another account, another asset is decreasing, I will credit. Okay. Same rules for the expenses. If the expenses increases, debit it. If the expenses decreases, credit it. I am giving salary to the employees. Okay. Now that salary is an expense for me. So what I will do, I will debit salary account and I am giving cash for that. Okay. Now that cash is my asset. That cash reduces, it decreases. What I will do, I will credit cash account. Okay, so the rules of assets and expenses are same. If the asset increases, debit it. If the asset decreases, credit it. Expense, if the asset increases, debit it. If the expense decreases, credit it. Okay, now the reverse rules for the liabilities, capital and income. Okay, what does the rule of liability says? If your liability increases, credit it. If your liability decreases, debit it. Okay, I purchase goods from Mr. Sham. Okay, now Mr. Sham is who? He is my creditor. It will come under what? liability. I have the liability to pay to Mr. Sham. He becomes my liability. He's our creditor. So Mr. Sham account will be credited. I purchased goods. The goods are my assets. So purchase account will be debited. Asset increases, I will debit it. My liability also increases, I will credit it. Okay, let's say I paid money to Mr. Sham. Okay, if I paid money to Mr. Sham, my liability reduces. Okay, it decreases. What I will do, I will debit Mr. Sham account. What I'm paying cash to Mr. Sham. Cash is my asset. Okay, and cash account will be credited because my asset is reducing. Okay, the next is capital. When the capital increases, credited. When the capital reduces, debited. Okay, I bring in cash into my business. uh, Business is a separate entity. I am a separate entity. Both are considered, the business and the owners are separate entities. So when I bring in the cash into the business, that is the capital I am giving into the business. So that what happens? The capital amount increases. I will credit capital account. Sorry, it increases. I will credit capital account. It comes in the form of what? Cash. Cash is what? Is the asset. Asset increases. I will debit it. Okay, understood? Or else if I am taking out money from the business for my personal use, what happens? The capital, it reduces. So capital account will be debited, and cash is an asset which reduces, so it will be credited. Okay, and the last one is income. For it also the rule is same. If the income increases, credited. If the income decreases, debited. Same example, I got a commission from somebody. Commission is my income. What happens? My income increases. Commission, my income, it increases. I will credit it. How? In the form of what I got it? In the form of cash I got it. So cash is my asset. That also increases. I will debit it. Okay, so this what the modern approach says, that whatever transactions in your business, they will either follow in the category of assets, liabilities, capital, expense, or income. The rules of asset and expenses are the same. When it increases, debited. When it decreases, credited. And the rules of liabilities, capital, and income is same, that when it increases, credited. When it decreases, debited. I hope you understood both the approach, the traditional approach as well as the modern approach. Whenever you are passing any journal entries in the books, do just take consideration in these rules, and it will be very easy for you when you are passing the journal entries. Hope you get it. If you have faced any difficulties, do let me know. Bye bye.